Bitcoin is bleeding yet again today, and now we're actually getting to the point where we're closing daily candles below bear market indicators and key levels of resistance. Now, I don't want to take up a whole bunch of your time, so I'm going to make a quick video explaining some of these indicators and where I see this market going in the short term. Now, if you want to see where I think this market's going in the mid to longer term, please watch a couple more of my videos. It'll go more in depth about that and a little bit more in depth about some of these indicators that I'm referencing in this video. I've posted them over the last couple days. You can see them right on my page. Now, what I'm going to go into first is probably the worst of the news, which is that I don't believe the bleeding is done just yet. As I've stated in some of my previous videos, I think over the next 2 weeks before the liquidity flows back into the economy from the government shutdown, we will chop and chop and chop. As you can see for most of this year, that's what we've done. We have done a lot more chopping with small bursts of pumps than anything else. We have just continued to chop and chop and chop. But what I do see happening is that at some point, whether it's today, tomorrow, or going into next week, that we actually end up seeing a move down to the $90,000 to $92,000 area. And the reason that I see this happening is down here at 90 to 92,000, we actually opened up a CME gap right here that has not been filled yet. In addition to that, you can see on this liquidation heat map that we do have a cluster of liquidations right at that same exact level. So in my eyes, that seems like an area that market makers could want to bring the market down to liquidate before we have any sort of meaningful move back up. Now, the other thing I want to bring up is this 50 weekly moving average. Obviously, you can see that we've been hugging this line for the past 2 weeks now, and we've now started to close daily candles below this indicator. The 50 weekly moving average is well known as, the point where if we start closing weekly candles below this line, this indicator, then it very much indicates that we are heading towards a bear market. You can see last Sunday we were on course to do so. Then we got the news that the government was going to open, and we shot up above it to close the weekly candle above this line. And with Sunday just 2 days away, I'm going to keep a very sharp eye out for what this market does over the next 2 days to see if we can get a move above this 50 weekly moving average, or if we end up actually closing a weekly candle below it. And I believe if we end up closing a weekly candle below it, that's when we will end up seeing more bleeding in the market. So I could completely see a scenario play out where over the next day or two, we see a move up, but it doesn't break above the 50 weekly moving average. And that's when we come back down to the 90 to 92 to make an actual bottom. Guys, I want to be 100% honest with you. Nobody knows what's going to happen with this market for sure. If anybody says they do, then they're just flat out lying to you. This market has been in a downtrend for a month and a half now, and obviously that's due to a lot of uncertainty between the government shutting down, economic data not being released, the Fed coming out as dovish, and trade wars that have consistently popped up out of nowhere. This market is very uncertain and can just flip one way or the other on the drop of a dime. And I want to just completely express the fact that we could be heading for a bear market right now. It is 100% on the table. There is no reason that we have to continue to heading upwards or to new all-time highs, which is why I always stress on this channel the importance of having your own plan. I don't think there's anything wrong with consuming as much information as you want from a bunch of different people, but I believe it's very important to devise your own plan because it's your own money. Know what you're going to do if it goes up, if it goes down, or if we're just chopping for a little bit. Because there's every likelihood that this could be the bottom. We shoot to all-time highs and alts pump and alt season happens. And there's just as much likelihood that we make a fake out here and then drop back down and then the bear market's in, or anything in between. We could pump back up to 116 and then that could be it too. So it's very important, and that's why I always express the fact of having a plan and knowing what you're going to do, because this market has been very unpredictable, even for the most seasoned people in this market. They have been caught by surprise over and over again. And I'll continue to do the best I can with providing you any insights to the market that I believe are important. But as I've said earlier, this 50 weekly moving average is the indicator to watch. So please, as we get into Sunday and the weekly close starts getting very close, watch Bitcoin's price. See if we can have a move to the upside. If we can break through this 50 weekly moving average and just close the candle above it, that is great news for the market going forward. As I've stated in my previous videos, and if you haven't watched them, please go and do that, because I'm not going to go too in depth with it right now. I believe over the next couple weeks, we will continue to chop up and down. We might set new lows at the 90 to 92 area, like I said. We might come above this 50 weekly moving average to close a weekly candle above it, but I believe we will continue to chop for the next 2 weeks, give or take a couple days, until the government's liquidity that's been held up gets released back into the market, until the SEC can start approving these altcoin ETFs, until Congress gets back to work approving crypto legislation, and until we get closer to this Fed meeting and we get a better idea on what they think they're going to do at the meeting. And not only that, the economic data that will be released. And that's another very important thing too, that is going to have a very, very big impact on this market. We didn't get economic data for nearly 45 days. And we're going to get a lot of it over the next 2 weeks. It's going to come back to back to back to back, and that could really cause a massive amount of volatility in this market over the next couple weeks. So please, one, keep an eye out for this 50 weekly moving average on Sunday, and keep an eye out for when these key pieces of economic data are being released, so you know going into that day what's happening and why there might be volatility. And more important than anything else, have a plan so you know what you're doing when that volatility comes.